Hi guys, my name is Neetu Brahma and today I am your boring CA. In this video, we are going to be discussing the tax case of Vodafone International Holdings BV versus Union of India, popularly known as the Vodafone Tax Saga, a tax litigation that began in the year 2007 and a tax demand that has snowballed to approximately Rs 20,000 crore in 2020 along with interest and penalty. Let's take a look at what happened. On 11th February 2007, Hutchison Telecommunications International Limited, a company listed on the stock exchanges in Hong Kong and New York, entered into an agreement to sell its shareholding in CGP Investment Holdings Limited, a company tax resident in Cayman Islands, to Vodafone International Holdings BV, a company tax resident in Netherlands. So, where does India come into the picture? The purchase consideration of $11 billion was calculated based on the economic value of Hutchison SR Limited, a company that was tax resident in India. It is very important to understand that at this stage, Vodafone could not have purchased all 67% equity of the Indian company. This is because the foreign direct investment limit was set at 74% for the telecommunications sector in India. And Hutchison SR Limited already had other foreign investments. The transaction was done keeping in mind the FDI limit set by the Government of India. The call option enabled Vodafone to acquire further interest in the future if and when the Government of India decided to liberalize the FDI limits in the telecommunications sector. This transaction was picked up by the Indian income tax authorities and a notice under Section 201 of the Income Tax Act was served to Vodafone for non-deduction of taxes at source. After various stages of litigation, a judgment was pronounced by the Honorable Supreme Court in January 2012. This judgment broadly focused on the taxability of transfer of an asset made by one non-resident to another non-resident outside India. As per Section 9(1) of the Income Tax Act, in case of a capital asset, income is deemed to accrue or arise in India on transfer of capital assets situated in India. The interpretation of these 7 words became the key for determining the taxability in India of an acquisition made outside India. In its judgment, the Supreme Court concluded that controlling interests are intrinsic to ownership of shares and cannot be a separate or a distinct capital asset. Since Section 9 does not expressly provide for indirect transfer of shares, transfer of CGP shares cannot be said to be situated in India. This Supreme Court judgment became a landmark judgment for determining taxability in India on transfer of capital assets situated outside India. And without wasting any time, the Government of India made amendments to Section 9 via Finance Act 2012, which was announced just 1 month after the decision of the Supreme Court. This amendment was said to be a clarification to the existing provision of the law and was made effective retrospectively from the year 1962. A retrospective amendment is an amendment made generally to close a loophole of law or to clarify a provision of the law. Tax experts across the world questioned the validity of a retrospective amendment made in contravention to the judgment of its own apex court. Aggrieved with the retrospective amendment and after various negotiation attempts to settle with the finance ministry failed, the Vodafone Group approached the Permanent Court of Arbitration at Hague, Netherlands and initiated arbitration proceedings against the Government of India for breach of the guarantee of fair and equitable treatment. In a unanimous decision pronounced on September 2020, the Permanent Court of Arbitration held that the Government of India was in contravention to the bilateral investment treaty between India and Netherlands. The tribunal directed India to stop its efforts of recovery of taxes from Vodafone based on a retrospective amendment that was in contradiction with its own Supreme Court judgment. That was the Vodafone Tax Saga. You see, to understand tax laws, it is very important to understand how these tax laws evolved. In my next video, I am going to start a new series called Evolution of Taxes in India. To know more, please subscribe to my YouTube channel The Boring CA and follow us on Facebook and Instagram for further notifications. Thank you.